quick heads up, the Alpha Report has been so popular, we're going to be incorporating it into the Trumponomics course for free at the end of February. So if you're not a Trumponomics course member, you're going to want to become a Trumponomics course member. Go to meetkevin.com, bump the coupon code a couple days to give you that chance to get in before we move the Alpha Report into course members only. And that'll be all existing course members in the Trumponomics course. Oh boy, is DeepSeek a scam? Could it be that DeepSeek AI gets exposed as a scam? And what is that going to mean potentially for a reversal of all of the woes that artificial intelligence stocks got hit with, specifically the chip making and designing companies over the last couple days? We'll talk about that. We'll also talk about ASML's earnings. Do they tell us anything about the future of artificial intelligence capex? A little bit with Nvidia and expectations for the next 5 years on capex as well. Then we've got to talk about the Federal Reserve, what to expect today, what Donald Trump just did, and of course, a little bit of an earnings preview with what to look for from Tesla, Meta, and Microsoft on today's Meet Kevin Report. News that makes you money. So today we're actually going to start with the joke of the day, which is a nonprofit brought us a $20 a month app called Artificial Intelligence. And a hedge fund brought us an open source version of the same thing. Anyway, I think that's actually kind of ironic, so I had to bring it up and include that as our joke of the day. Isn't it a little weird that a hedge fund in China brought us a free open source platform for artificial intelligence? Well, this is leading some like Bill Ackman to say, something's sus here. How about if you're a hedge fund, you set up a bunch of shorts on Nvidia, and then you say you've trained a model equivalent to an OpenAI, which has spent hundreds of millions of dollars on training for a fraction of the cost. In fact, potentially as much as 20 to 40 times more efficient. Now, while I respect Bill Ackman's jade, I also know he was complaining all day long on the day Nvidia was down. And I don't think that's because he has Nvidia exposure. I think it's because he has a lot of Google exposure, and Google's been spending a lot of money on artificial intelligence infrastructure. I'm not exactly sure what kind of short-term bets he's got going on or what's going on, but I usually associate any of his emotion with his trading, kind of like what we saw during the COVID pandemic and also the 5% treasury disaster. This is straight market manipulation, but I guess it's legal for hedge funds to do it, including Bill Ackman. But anyway, yeah, look, I mean, is it possible that DeepSeek is a scam? Of course. In fact, on the first day that we were covering DeepSeek, which was, well, we covered it Friday, we covered it this weekend, we covered it Monday after the shock, covered it every single day. We've been saying all that's really going to take for our AI and artificial intelligence stocks to really rebound is somebody coming out going, look, this is a scam. I thought it was going to be Elon, but there were a lot of other people, and Elon's been relatively quiet on it, which kind of leads me to think it's not a scam, since he's usually the first to say it's a scam. But anyway, we talked about that yesterday. What's more important is that doesn't matter if the $5 million, $5.6 million is spent for training for DeepSeek was a scam. The answer here, in my opinion, is no, because the inference side is going to be what ends up, in my opinion, using more compute, and frankly, on the inference side, DeepSeek is actually substantially more efficient in the way it handles artificial intelligence data and the models by basically parsing segments of the model and only using the part of the model that's relevant to your query. This leads to running a significantly more efficient model, and it really doesn't matter. And as I've been saying since day one, it doesn't really matter if DeepSeek ends up, having lied to us about what kind of chips they're using. I don't really care how they trained it or what they spent. They've created a substantially more efficient way of providing artificial intelligence data. Now, don't get me wrong, I don't actually think that stocks are all going to plummet and continue to plummet related to DeepSeek, such as Nvidia or the chip makers. ASML had a fantastic morning. We'll talk about those earnings in just a moment. And I've been saying that for a few days, mostly because it's going to take significant time for CEOs to wake up to, oh, we could do this a lot more efficiently. Either way, take a look on screen here. This is directly from my Alpha report, which will be included in the Trumponomics course for free. You want to get that before the price goes up a lot. Look at this. Trades today. Pay close attention to that rectangle of Nvidia, 125.59, 122.50. Very important. That rectangle is where Nvidia usually gets stuck, and you generally get a big bounce or a big rejection off of it. What was my prediction? Look at it here. DeepSeek bounce. Expect a bounce today. Why? It will take weeks to months for capex investments to fall, which I expect they will. Consider how the process will play out. Now you could read this right here, but the point is, this is just a sample of the Meet Kevin Alpha report that I send every day the market is open. I also pitched that Apple was probably going to be a big beneficiary before it started moving up. I pitched it when Apple was red on the DeepSeek morning, and it turned substantially green afterwards over the last few days. These are the kind of insights I provide in the Meet Kevin Alpha report. You can get it for free as a sample if you want over at meetkevin.com, and you get a 2-day sample if you want to get in before we raise the prices on the Trumponomics course at meetkevin.com. But for now, feel free to at least sign up for the Alpha report for free. You get a text and an email, and you'll keep getting those if you're in the Trumponomics course starting in March. So at the end of February, we're moving it just to Trumponomics members. Anyway, go get that coupon over at meetkevin.com, extended for 2 days. Oh, we don't actually need as many orders. Okay, let's pull back some of those orders. And then TSM's got to wake up. And then ASML's. All of that entire process, I expect to take 3 to 6 months, maybe even a year long. This is why yesterday I talked about sort of the parasite having been planted that's slowly growing and slowly eating up that future artificial intelligence demand for chips from the inside out. Now keep this in mind. I don't know that all of us might have a scale of just how much this artificial intelligence spend matters. But somebody left a comment yesterday and they said, Kevin, Nvidia still creates GPUs for gamers. Like, does that not matter anymore? The answer to that is not so much. I mean, yes, it matters somewhat, but not so much. It matters maybe about 10%. Why? Well, just look at Nvidia's expected spend over the next 5 years, that is spend on Nvidia products over the next 5 years, compared to what Nvidia did in the last 5 years, before the AI movement. So before the AI movement, so really before 2023, Nvidia brought in just about $83 billion. Well, in the 5 years ending 2029, Nvidia is expected to bring in $1.06 trillion, so a little more than 11x, because of data center spend. So you can see this is a stock that's heavily propped up on data center spend. And anything that makes data center spend plummet, even 10%, is actually going to absorb or basically zero out everything you're doing with gaming style chips. All you need is a 10% cut in data center spend over the next 5 years. Boom, all the gaming stuff is out the window. It's almost like you don't even have that side of the business. That's only a 10% decline. That's wild. Now, the Financial Times is claiming that OpenAI did find evidence that Chinese artificial intelligence startup DeepSeek did end up using the US company's proprietary models to train its own open source competitor. That's a quote from the Financial Times. Microsoft is investigating this as well. Some argue that either the OpenAI API was used to just milk all the data OpenAI has, or that a process of distillation was used where basically a smaller, cheaper model uses the outputs of the larger, more expensive model to help it reinforce, learn, or to teach itself how it should be responding. Maybe, could it be? Fine. Again, I stick to my guns that ultimately, when you have a more efficient inference model, a lot of people are going to adopt that. A lot of companies are going to adopt that. And frankly, it's a good thing. It's a good thing for everyone. Less spending is a good thing, ultimately, because it means we could spend more money on things that are actually going to be innovative rather than throwing good money after things that just aren't necessary anymore, like so many data centers. If we need, let me simplify that. Let's say our society, for the best rewards for society in America or even the world are 100 data centers. And right now we're on the trajectory towards building 1,000 data centers. We really have an excess supply of 900 data centers, and I'm making those numbers up, right? Do those extra 900 really benefit society? No. So just get rid of them, right? That's wasted money that could be used towards other innovative things, like curing cancer. And I don't know that today's LLMs will actually be able to do that. I still think we're in the chatbot, agent bot phase, and it's just not that great. but we'll see. ASML bookings did surge, though, in part, well, actually heavily in part because of artificial intelligence. Their margins are 51.7% on gross margin for their artificial intelligence chip-making machines, basically. They're like the machine that makes the machine. That was over the 49.6% expected. Really, really good. Net income's up 30%. They sold 132 lithography units versus 121 expected. Just remember, oh, those are Q4 numbers, right? So none of this is really expected to even be post DeepSeek yet. They do argue that DeepSeek is good because it means lower costs will bring lower applications. So worth noting, another company here saying, oh, this looks good. Andreessen Horowitz says, hey, this DeepSeek thing is the Sputnik moment. You've got Microsoft Satya Nadella, you've got Sam Altman, a lot of people, Nvidia, applauding the efficiencies found in DeepSeek. So even though you've got this sort of like thing going on in the background where you've got the crypto czar David Sachs of the White House now saying, oh yeah, we are seeing, there's substantial evidence that DeepSeek probably just stole our data. Doesn't matter. The product itself is still more efficient. We can learn from it and use it. So we'll see what happens. But that's the latest on DeepSeek. Now, today, we do have a Federal Reserve meeting, so keep this in mind. Nick T sees that December core PCE rose just 0.18% or 2.2% annualized, 12-month rate at 2.8%, 6-month and 3-month at just 2.3%. Now, that's good. But here's what we need, in my opinion, going forward, and I think this is actually pretty important. What we need from Powell is A, progress on disinflation. We just want to hear him talk about that. Hey, things are looking good. We want comments that tariffs so far have been slower moving than expected, which is really important because as of December 18th, the Federal Reserve is starting to pre-price in Trump tariffs, which is not great. So we want to see a relaxation here of this tariff talk. We do not want a suggestion of a rate increase. That would be very bad. We want a reiteration that the economy is doing great, jobs are strong, no rate cuts are needed. The layoffs from the federal government aren't going to be really bad, and everything is fine. Now, why do I say that? Well, because remember, and we'll talk about this in a moment, but Donald Trump offered basically leave to a bunch of federal workers. I'll go into the details in just a moment on this. But think about the combination that we're setting up here. There's less pricing power at companies, trade tariffs, which both of these are anti-growth, right, at least initially. Germany, China, and UK are close to a recession. Then you've got government firings, layoffs, and quits, all which have actually been supportive of jobs over the last few months, especially with the election. And then you've got lower AI capex, in my opinion, coming soon. I kind of think you're burning the candle of what's left of a good economy at all ends. You're literally crushing all sides and shrinking the economy. I don't know how we're still going to have a positive GDP if all this stuff continues, but oh well. So Powell, though, he's going to tell us about how everything's fine and GDP is doing great and growth, everything's doing, superb. And so therefore, while we don't need rate hikes, nothing is off the table, and we'll just take it meeting by meeting for rate cuts. I really think Jerome Powell doesn't have to F this meeting up. Just take it easy. Don't make any crazy, scary announcements and just move on. Now, when it comes to a Tesla earnings preview, look, usually Tesla earnings predictions revolve around the deliveries, which we obviously already have, and then subsequently vehicle gross margins. That's usually what Tesla matters about, but that's not really the case for Tesla right now. Tesla has not been moving off of car sales, though it may be slightly moving off of hope that there could be a lower cost vehicle announced. I'm going to hold my breath on the lower cost vehicle. I think a lower cost model that's been sort of teased in the earnings presentations really just refers to lower cost Cybertrucks and Model Ys. Like technically the refreshed Model Y is considered a new model, right? Anyway, the EV tax credit isn't gone yet. And while we have to talk about the EV tax credit, I want to quickly announce that make sure you get into that Trumponomics course because the amazing alpha report that we do every day, starting at the end of February, that is going to be included for just course members. So if you get into Trumponomics, you will be guaranteed locked into that alpha report every single morning where you get some setups for trade ideas for the day. But then when you're in Trumponomics, you also get the alerts for when I'm trading with a trading challenge that we've got starting February 1st. So make sure you're in. As a result of this announcement, we are doing a slight 2-day extension here on the Trumponomics coupon code. My birthday was yesterday. I forgot to mention that we're making this change with the alpha report. Oopsies. It's because I was going to post another video yesterday, but instead Jack and I decided to play Flight Simulator and go to Cheesecake Factory together for a birthday dinner. So I apologize about that. But anyway, yes, that has been updated. So go to meetkevin.com to check that out. And that will guarantee you access to the alpha report for no ongoing cost. And you can also preview the alpha report if you want. Just go to meetkevin.com / well, actually, honestly, yeah, just go to meetkevin.com at the bottom. Just sign up for the alpha report. That's the easiest way to preview it. If you sign up after the market opens today, you'll get your first alpha report tomorrow. Anyway, okay, full self-driving updates are really going to be what matter here, as well as humanoid robotic updates. This is not just my opinion. Bloomberg Intelligence agrees with this. Tesla stock hasn't been moving because of car sales growing. You know, the EV tax credits are likely to affect and slow down car sales, but the stock hasn't really moved down because of concerns over that. It's been moving up because of excitement over self-driving cars. And this is actually why, and no surprise, but Elon Musk and Tesla AI have been tweeting about how Teslas are now driving themselves to the port to end up getting shipped. And they're doing this on purpose on earnings day because, well, frankly, this is what's driving the stock right now. So it's kind of smart, but it also shows progress. So it's like shrewd, but it's also kind of exciting. I do think it's interesting that they are 3x speeding this because I feel like this should be normal speed. So they're going really, really slow, but that's okay. You know, it's self-driving. It's awesome. I'm a big fan of it, and I'm very excited about it. But anyway, so look. The other thing that we're going to see are probably incredible margins on energy and substantial energy deployment growth. We've already seen the deployment growth, and it keeps growing. It's going to keep growing to 25 to 50% of Tesla's future earnings until we get cybercabs and robotaxis and, well, same thing, and then humanoid robotics. But right now, it represents about 20% of Tesla's operating income today. It's already producing over $300 million a quarter. You know, batteries, mega packs and home batteries, they're great. And Tesla has pricing power for batteries. Like, do people really want a solar system that's Tesla or a solar panel that's puzzled together with Q cells from Germany and Enphase chips? I mean, as much as I love Enphase, I have to say Tesla has more pricing power than Enphase when it comes to what a 25 to 55-year-old dudes want. That doesn't mean Enphase is bad. I actually think it's a fantastic investment at a very, very low cost, but and over time, as rates come down, it'll be a lot more desirable. But that's really a topic for a different video. But I do think we're going to get some updates on energy. We'll get more FSD progress. I really think there's a 90% chance that Elon Musk really yaps up FSD progress and how great things are going. I also expect optimism about Optimus, how it's already doing amazing things, and that there are mass production goals later this year. Maybe even he'll say, hey, you know, we're going to be spending a lot of cash on capex for robots, so maybe we'll have to raise money or whatever. He could do a warning like that, maybe not. But I would say some kind of suggestion that there'll be increased capex for Optimus is like 70% likely. But that'll actually be cheered because people want more Optimus development. I think there's only a 30% chance we get some kind of excitement over an actual new model. If there is a new model, it could do very well for the stock just because it's not really fully priced in. And it could be true that other EV manufacturers are just going to go away because of the removal of the EV tax credit, which would mean that Elon's right about the EV tax credit, ironically, getting removed and helping Tesla. Because you've got companies like Stellantis that are like, yeah, we're going to scale back our EV plans and make more new industrial internal combustion engine vehicles, ICE vehicles. And it's like, okay, wow, y'all really going backwards. Okay. Anyway, Tesla earnings expectations, 75.4 cents of adjusted EPS, 27.2 billion of expected revenue, net income, 2.66 billion expected. Looking at 8.49% expected volatility and average selling price of about 40,962. Want margins to be at least 18.5%. And we'll probably get some updates on Cybertruck sales slowing down a little bit. But I think Elon will sort of wash that and clean that by arguing, we use those in the Palisades fire. So no, sales haven't slowed down. Okay. Anyway, Meta reports earnings today along with Microsoft. The most important things to look for here aren't necessarily whether they beat or miss. Honestly, everybody is going to look for the bullish commentary about how these companies are both going to be able to have higher profit margins with the efficiencies discovered by DeepSeek that they can implement. I almost certainly expect that they're going to say that. And then I would be watchful for what they say on capex. I actually think they'll probably say something like, we're looking into how we can become more efficient, but our capex plans remain unchanged at the moment. So some kind of like brush off like that. It's only been 2 days. It's way too soon to really make any kind of planning. But remember, these are super high margin software businesses, especially Microsoft. So lower AI costs actually help them boost their margins even more. And they both have massive staying power right now. Big PP. As far as some Trump updates, Donald Trump did offer incentives to 2.3 million federal workers, the civilian side, with the exception of the USPS and certain critical segments. I think it was immigration, national security related, and USPS, the post office. But anyway, you can basically stay in your job until September 30th, 2025. Work from home is acceptable. It's sort of a backward door to firing people because the federal government actually has a lot of protections for federal government workers who are not on probation. It's actually why the Trump administration has already asked administrators to let the Trump administration know a list of workers that are on probation because they're probably all going to get fired. But you have the rights to reinstatement, the right to file an appeal, the right to file a complaint. You have to get 30 days notice. You have to be given a detailed description of your alleged misconduct. You have to have the right to respond to the evidence against you. Like, it's actually really hard to fire a federal worker. And that's why they're doing it this way, to make it easier to fire someone. It's like, hey, please just reply to the email saying I resign. That's literally what they're asking people to do. And then we'll just keep paying you until September 30th. But if you say that anytime between now and then, we could just fire you. Basically, they're turning you into an at-will employee. But hey, you could get 6 months worth of pay and get another job at the same time. Like, you could literally keep getting paid and get another job at the same time. The problem is the people who do that early will benefit the most. Everybody who waits until the end, when, the unemployment rate starts skyrocketing because of stuff like this and everybody's competing for jobs in the open market, well, that's going to create a little poopy doopy around the latter part of the year. So I think if you're going to do this, or you think your job is at risk at the federal government, the sooner you do it, probably the better, because you'll have a better chance of getting a job quickly before it becomes hard to find another job. That's my take here. So I think that's somewhat important. We also have a federal district court judge that froze Donald Trump's grant freeze and loan freeze. Okay, fine. That'll get reviewed between now and February 3rd. But that's it. So we're going to be covering the Fed today. We'll cover earnings today. So make sure you're here at the channel. Subscribe to the channel. We'll cover those later. Look forward to seeing you. So we'll keep today a little bit shorter here in the morning. And we'll see you soon, folks. Thank you so much for being here. I love you all. Appreciate your support. And go check out that the course over at meetkevin.com. Thanks so much.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.